Steve's
All right,
everything I wanted.
we're back.
Steve's everything I needed.
After what was definitely a long weekend, and I lost my voice by the end of Sunday night.
So tell me what to do now.
When you're
'Cause Steve,
cutting, you missed the cutoff for a Christmas album. I think you got to cut one this year.
you know, I don't think I can compete with our boy Uncle Frank.
I think you're selling yourself a little short.
Start spreading the news.
All right, so I am going to make a full video discussing the meetup, but I do have to say, if you came, I think everybody had a great time. If you missed it, I would highly recommend going to one of the meetups in the future. I see some people in the chat I was hanging out with, especially Ezzy, who I am now on a group thread with.
Oh,
So met a lot of really cool people at the event. It was really good. And I can't recommend enough saying that if you're able to go to one of these in the future, well worth it. I mean, Ray, it was awesome hanging out with him. We really missed some other people, Chels and Lena. Wish you guys could have came, but it was awesome. Matt, what did you think of the meetup?
well, I have the experience of going to both the Miami one in August and the one in New York, and both were just absolutely phenomenal. Um, both were just a great humbling opportunity. Definitely, when you leave those things, you understand why you come live, right? You understand why you're streaming. You understand why, um, and it really gives you that instant feedback loop that you need to be like, okay, what I'm doing is not for nothing. That these aren't bot generated people in the chat, they're real people, and it's like mesmerizing to an extent, that humbling feeling. And and the thing that I walked away with, because I think so many people were like, oh my god, like these people, like, do you feel famous, blah blah. It's like, we're at these meetups for the same reason you are. Like, we were fortunate to find a community, and I think really it was like the ground pieces of Chris and Steve and Amit just continuing to include others. And I think we just were able to form something that has now become bigger than all of us. And I'm excited. I mean, Doug and I had some great conversations about what um hopefully can happen for the next one. But honestly, like, I wouldn't have changed a thing about the New York meetup and meeting people and hearing their stories and learning from them. Um but yeah, I'm excited for LA. I'm like 90% certain I'm gonna go to LA and then Singapore after that. Like, it's insane. I appreciate every single one of you guys. And to actually show up to the venue before the event even started and there was a line out front was just insane.
I think that was
Um,
one of the craziest things that we got there, and within a good 20, 25 minutes, I think somebody probably posted it. I didn't take any pictures of it. There was 50 to 75 people outside in 12-degree weather waiting to get in.
Insane.
And one of the things I was really impressed with was there was at least 5 19 and 20-year-olds that came. One 19-year-old came with his father. They were
That one was
talking to him.
awesome. That one was awesome.
Yeah, I mean, it's really great seeing that the younger generation is taking their financial future so seriously. And the two guys that were college students that flew in from Minnesota, I mean, it was really interesting. There was a really great mix of people. You had people flying in from overseas, Michelle, what's going on? Michelle and Ray were hanging out with us. I mean, it was really something else. I gotta say, it was incredible. Amit did a hell of a freaking job. Hell of a job. I was just informed that I am going to the LA meetup also.
By
We,
whom?
we will see if that actually happens or not.
By whom, Steve?
I was just informed that I'm going to the LA meetup. We will see if that actually
By Amit or the shadow government?
the shadow government said that they want me out of the house and I need to go to LA.
Oh, she was probably like, "This is the best Sunday I've had in months."
Seriously. And by the way, before we get into the disclaimers or anything, there is a picture of me that William painted of me holding a cow. It is freaking amazing. I have to figure out where I'm going to hang it. So it is currently on the couch. That is actually somebody painted me holding a cow.
At first, when I saw it from afar, because like I saw it from afar before we took the picture later on, but I was like, "Oh, that's a really good canvas." Like somebody found out a really good printing press, and then you were like, "This is a painting," and then I walked up to it and I was like, "Holy effing shit! That is insanity."
It was absolutely insane. I did not know. So I knew, but I didn't know. I was told, but I didn't really put two and two together. And by the way, the amount of people that wanted to take a picture and do milk shots with me was freaking crazy. Matt, how was the mango?
The mango was insane. Much
And for
appreciated.
those of you that did not come, I did show up with a gallon of whole milk and a ridiculous amount of drinkable yogurt.
It was well worth it. I saw people walking around drinking them. It was pretty funny.
It was so amazing.
It was awesome. I got to meet Boss Lady for the first time. That was nice.
Did.
That's all we'll say about that. Hopefully she doesn't hate me. But
Why would you even say that?
She even gave me a gift. How great was that? Steve gave it to me Sunday night.
Yes.
What else? But no, it was a phenomenal time, man. And I got to meet Erwin. Erwin's the man. Doug and I had a good couple conversations. Angela was great. Jess is great. They helped put on the event in New York, and
Jess
they're
did
doing it
a
in LA.
ridiculous job. I mean, her and Amit did a great job.
I think it worked really well.
And then, we were outside in the freezing cold, and I can't share it like this. I have stuff in my labels that should not be shown. Hold on. Nothing bad, but just names of companies and stuff. Let me download this. Not sure if and we got some announcements and whatnot that we'll go over, but not sure if anybody saw this or not, but we went to dinner on Sunday night, and this may have happened.
It's a good picture.
It's a great picture.
Great picture.
Great picture.
Impromptu too, because like literally everyone was like storming. Like I think Tanner wanted to go home and take a nap. I think Chris did as well. I don't know if did Chris come back to Mitts after that. You were headed home because you had work in the morning.
Yep.
So yeah, ended up working out.
So Chels is correct. I now have an Instagram account, and we may have made an announcement at Amit's thing where Amit and I are starting our own show. The Instagram account is only going to be for the show because I am a boring person and I don't do anything.
Oh, you mean that one? Okay.
Yeah.
Have you come up with a name yet, Steve?
We don't have a name yet.
T-minus 2 days.
We legitimately do not have a freaking name yet.
If you don't have a name, are you going to push it back? You're just going to keep it as untitled for now.
I mean, it's dropping on Thursday. We don't have a name, but the first guest is Josh Brown.
You allowed to say that?
I mean, we said it at the meetup.
That's true.
I mean, Amit said at the meetup. I don't think it's a secret anymore. It's probably just a secret to the people who didn't come. I am sure Amit's going to talk about it tomorrow. So, yeah, I shouldn't say we, I didn't do anything. Amit got Josh Brand to be our first guest. We are planning on dropping it every Thursday. And I will tell you, I watched the episode twice that we shot. It's incredible. Matt, I think he showed you guys the opening of it.
Literally the first like 30, 40 seconds, like where Amit kind of had like a little monologue. It wasn't very lengthy, and then immediately went right in, and it just like it felt like home. But then Amit like slammed his laptop shut and then said you have to watch the rest later.
Yeah. Yeah.
So
it's really good. We started a studio. I mean, we didn't start, we got a studio. Yeah, it's going to be good. So hopefully everybody enjoys it on Thursday when it comes out.
yeah, man. And then can't I may or may not know who the second guest is, so we'll probably keep that one a secret, I'm sure.
You know what? I think you know who the second guest is.
I may or may not, and I have a photo with that person, and I'm super excited to like post it, but I can't until you guys. So like, this guy's probably like, "Oh, I took his freaking photo with this kid, and he didn't even post it and tag me. Like, this is BS." And so yeah, hopefully we can.
So one
Dude,
post. You guys
brand new jacket, looking fresh.
Josh was a beast. It was amazing. Second one, which can't say who it is yet, was amazing also. We'll see what happens. It's that's actually a great name for the pod, Financially Untitled. I love that.
I do too, actually.
We'll see.
I've been like thinking up so many words. I feel bad because like I want to help, but at the same time, I think you and Amit just have to spitball it and you'll find something.
Dude, there's no hope for us. There's none. But be that as it may, we probably ate too much pizza this weekend. What'd you think of Patsy's?
Patsy's was good, Steve. You know, I was pretty upset because like first thing I ate was the meatball. And
how could you be upset with that?
No, I wasn't upset. That was delicious. But then later on, somebody said they didn't like it. They thought it was too. And I was like, I'm not going to tell you who because I don't want to ruin any friendships here. But I was like, I was pretty surprised. The pizza's nice, light.
Actually, you know what? I think I have an idea of who didn't like it.
Uh-oh.
Which is fine. I think I have an idea.
The chicken parm is good. I don't know what I had. It's some sort of like tiramisu thing for dessert. That blew my mind. I don't know if I've ever put any sort of dessert like that in my mouth. And it was such a small piece, but it was so rich. What else was there, man? Of course, I got a bunch of cigars. They made it back. None of them cracked. Nothing. I don't know how I made it, considering I had zero space, Steve. I literally had zero space on the way to New York, and then I pretty much somehow figured out a way to get all those cigars in, and none of them broke, which is good.
Yeah, we went to a cigar bar.
It was Doug. The cigar bar was a blast. That I was like thinking there when I was sitting there before I started talking to you and Erwin. I was like, how many great people have probably been in here and smoking? Because there's not many cigar bars, throughout all of New York.
No, there isn't.
So I was sitting there like crazy.
All right. Oh, Dougie's in the chat. Dougie, what's going on?
Hot Doug, as some call him.
Dougie is legendary. Showing up in a white suit, legendary. I mean, that was incredible.
It was, yeah. I don't know how to describe it. It hopefully gets some people fired up. I think the events are only going to get better. So it was a complete blast.
Yeah, it was really good. It was really good. And I'm trying to log into Instagram on my freaking computer, and it's telling me suspicious login attempt. Ridiculous. Probably because I have a VPN on. Anyway,
Hit us with the
Patsy was
disclaimer,
great.
Steve.
What?
Hit us with the disclaimer whenever you're ready.
Yeah, that's what I'm about to do right now. So we got a lot to talk about. Sure, Matt and I will both do a video about the meetup. I have a lot of thoughts about it. Please read the disclaimer. We are not financial advisors. We are going to be talking about the markets. We have no idea what your situation is, so please do your own due diligence.
Please, please, please.
All right, Matt. It was a hard day today. What are you thinking?
I'm excited. I mean, it's such a double-edged sword when I say something like this because I want to be empathetic to the people that may not have enough time, like in their portfolios, to like last through some of these things. But I feel like most people will, and a lot of times these things are V-shape recoveries. But to me, and I feel like it's insensitive to me to say I want stocks to go down because I want to buy more, because that obviously means people are losing money in the short term, and I want everyone to win. So it's kind of like counterintuitive. But my hope is that the folks that are long for the long term, around for the long term, um, take this as an opportunity to continue to look for great names, truffle pig out the great opportunities like you were just mentioning before the stream, Zeta being a nice name. I've been looking at Microsoft and at 410, almost getting back into the 300s at this point. Palantir obviously being down in the 150s before today, actually dropped into the mid 140s at one point. You have Dutch Bros in the low 50s. Um, SoFi in the low 20s again. There's just so many great opportunities that are starting to arise. And it's not like they're dirt cheap, but you think about it, nothing has really changed from these companies to really warrant this massive sell-off for some of these companies. Like Microsoft, if you think about it, sold down from like the 520s, 530s down to the low 400s. Like that is an opportunity. Did it deserve to be um, in the 530s? Probably not. But at the same time, great opportunity to potentially pick up Microsoft if you're thinking long term. Microsoft is also going to be a $10 trillion company in the next 10 years. So you think about it, it's a $3.1 trillion market cap right now. If you're able to pick it up, you're kind of guaranteeing yourself a 3x if it hits those milestones. Now, of course, there's always downsides or even upsides as well. But yeah, I mean, you could potentially look at, if you think some of these companies will do well, Microsoft being one, and then you say, let me get the compound annual growth rate, and you say, I think that that's going to outpace the S&P, you can potentially find some nice portfolio ads here. I'm excited for Amazon this week, Steve. I think I was listening to Dumb Money. They've been talking about Amazon now for a couple weeks now. I know Chris Camillo is building a large position. A lot of people are next. They're building a large position. I just think the writing is on the wall. There's just so many avenues to it. I think I might follow up this with a Seeking Alpha article, Steve, to make you happy.
Whoa, hold on, everyone. This is breaking news. Matt's making a return to the ring here.
Matt's making a return to the ring. They're twisting my arm with a lot of money, $65 to write. And so that's my free $65, Steve.
I mean, get after it, man. Get after it.
What else was there? I mean, Palantir earnings were absolutely insane. But the thing that I'm kind of curious about is do you think what's going on in the world right now, war boats and everything in the Middle East, I mean, do you think that this all warrants the market being down and pulling everything down right now, or do you think that it's a little bit overblown?
So before I answer that, I am going to answer a question from Michelle,
Uh-oh.
who once again, everyone, to keep in mind, I have no idea how to use Instagram. Okay, no freaking clue. I don't do social media. The only reason I have an X account was for my Seeking Alpha articles, pretty much. Like
Now look at you, Steve.
I
Now look at
legitimately
you.
don't know how to use not Seeking Alpha, Instagram. So I just saw that Michelle sent me something, and yes, you're correct. The next time that this happens, I will likely get a hotel room with everybody at the place so I can hang out longer. So that will probably happen. Um, don't know if my boss is going to come or not. We'll see.
Oh,
I don't.
oh, you mean the shadow government boss or the
Yes.
actual boss? Oh, okay, yeah,
So,
it's up to her.
but look, this is where I'm at. I think that this whole sell off's ridiculous. Okay. I think a lot of people are getting scared for no reason. Now, I could be 100% wrong, but what has changed since last week? Like, legitimately, what has changed? Is Microsoft going to generate less money? Is Meta going to generate less money? Is Apple going to generate less money? Are we worried about Nvidia being able to monetize CapEx being spent? Are we worried about Amazon and Alphabet reporting this week? Did we not like the numbers out of Palantir? I mean, tech got so wrecked that it is really to the point where things are so overdone. Microsoft teetering on a four handle to me does not make sense. I'm shocked at where it is. It was a great print. Guidance was good. This is one of the most profitable companies in the world, and it is not acting like it. We have a lot of fiction right now because nobody knows what's going to happen tomorrow. Nobody knows what's going to happen in a year from now. And what's happening in software, the big thing is there's nothing to counter it to prove that AI is not going to replace every software company, even though logically it won't. And every single company that is tied to software, including Microsoft, is getting freaking thrown out. I just, this is an interesting time to buy. It's an interesting time to dollar cost average. And for the future, I can't say it enough. The S&P, where did the S&P finish today? Because it's certainly not down that much. The S&P is still above 6,900. And once again, when you're in individual stocks, you got to be ready for the pain and you got to be ready for rotations. But the reality is that the S&P is over 6,900. We're around all-time highs. And even though tech is not working right now, you have a lot of other areas working. Walmart hit $1 trillion today, I believe. JP Morgan was up 2%. You had other companies like Berkshire up over 1% today. So there are things working in the market. I think that a lot of people get so focused on technology that when days like this happen, it's massive pain. But for a lot of investors that don't spend this much time analyzing companies that are just going into total market funds or S&P funds, they're not really feeling anything today.
Mm. I mean, I'm still. I mean, I had an opportunity. I told Doug on the way home. One, I was excited about Amazon, and so I had no idea. So let me just double check this before I quote this.
Okay.
How much of Anthropic does Amazon own?
I think it's 20%, 15 or 20%, something like that.
Amazon is the largest external investor in Anthropic, having committed a total of $8 billion. So they had an initial stake in 23 at 1.25 billion. Follow-on investment of 2.75, followed by an additional 4, bringing it to 8 total billion. They're currently trying to raise 20 billion at a $350 billion valuation. So they're saying basically that they think it's going to be high single digit, low double digit. Okay. Interesting. So I'm confused because when I was listening to Dumb Money, Chris Camillo quoted 15 to 20% ownership.
Yeah, that's
And
the numbers that I have stuck in my head.
okay. Because you listened to that conversation, or is it because of
No, it's just what I have stuck in my head.
okay. So yeah, Anthropic obviously doing extremely well. Growing to $350 billion valuation. That obviously will be a tailwind for Amazon, coupled with the amount of usage. I think a lot of people are picking up on Claude usage for coding. I think that they're eating that up, and so that's a big piece of it. But then I was looking through, I think, like you stated, from Microsoft, and I was like, okay, well, let me see how bad this is, right? Because everyone's talking about the RPOs and 45% of it being from OpenAI, and so to me, I was looking through, and it really doesn't look all too horrible. I mean, you look at it, I think last year, same quarter, 298 billion in just cloud um, RPOs, remaining performance obligations, and it's above 600 billion now. Yes, a large portion of that is associated with OpenAI. But I mean, yes, will OpenAI maybe not deliver as much? Who knows? But OpenAI is still a growing business that has the majority market share of chat bots and LLM usage at the moment. And so to me, you have that coupled with Anthropic coming through. To me, at the moment, it looks pretty reasonable to assume that Microsoft's cloud business is going to do perfectly fine. So yeah, it's just pretty interesting that the market overreacted, in my opinion, to what happened with Microsoft, and uh, not only that, but that 200 some percent commercial bookings growth that I'm seeing here on slide 6 of Microsoft's earning presentation, like that is absolutely phenomenal. Like that it can't just be from Anthropic and OpenAI. I anticipate a lot of that has to do with other companies wanting to join as well. And you also see that coinciding with Palantir's earnings, or not earnings, revenue growth of over 70%. And so, you're not just seeing singular companies accelerating in terms of how much bookings and how much work they're getting. You're seeing this also happen at Palantir. And that, if you're able to do it appropriately, like what we kind of been talking about, let me just double check the number here before I get a little crazy. That leads to, well, that's probably not appropriate, because the net income from Palantir in the first quarter last year was skewed because of those SARs, if you remember. So, sorry, the fourth quarter was skewed because of the SARs, if you remember. So we had a almost 70% cash flow from operations growth year over year in Palantir. So I mean, to me, all roads are pointing to some of these things are accelerating, and yet you're getting an opportunity to buy into companies much cheaper, not much cheaper, but cheaper. And yes, you could still say Palantir is expensive. You could still say Microsoft is still
Not
expensive.
nearly as much as it was a week ago.
Exactly. Exactly. And whether or not it persists here or not, regardless, it is allowing you to get things much cheaper by an order of, say, 20, maybe even 30% in some cases, depending on what company you're talking about, than you were just last week or 2 weeks or 6 months ago, depending on the company. And so to me, it's another quarter in the books to demonstrate AI is still a thing, while at the same time you're able to get prices that are cheaper than they were just a couple weeks ago.
Matt, do you mind if I switch gears and show you something real quick? and then we'll get back to
Steve,
Palantir, and I will give an update on Palantir.
I can only dream to know what you want to switch gears to, Steve.
I mean, I guess Danielle took a lot of pictures and sent them to me. Like I said, I have no freaking clue how to use Instagram, and I
Yeah,
just saw this.
that's gold.
This is gold. So, needless to say, the meetup was a lot of fun. I have milk, and the three of them all have different flavors of yogurt. Heroic.
That is absolutely a gold picture.
I don't even remember her taking this picture.
That was very early on. I think I was still.
Oh, it's definitely early on. I didn't even open the milk yet.
Yeah, I mean, that was probably as soon as I walked in because we're not bombarded with people. And then two, I still had my scarf on, which was one of the first things that I took off when I got there. So
Oh, that's heroic.
good on her for capturing that because then I had to go. Then I went outside and for like half an hour to shake hands with people. So
Yeah, no, she sent. I'll send you a bunch of these pictures. She sent a bunch of them. Okay, Palantir. I said it last quarter that it was one of the best quarters I've ever seen from a company. This quarter was even better. This is a unicorn. We all knew that this company is a unicorn, but I don't think people actually understand what they're doing at this point. You don't keep growing like this unless you have a very superior product. I mean, the fact that US revenue grew 93% year over year, the fact that their revenue grew 70% year over year in Q4, that's incredible. Their deals are not really slowing down either. Now in Q3, I believe they did 209 or something like that deals over $1 million. They did 180 deals over $1 million in Q4. This is absolutely incredible. Adjusted free cash flow is 791 million. I believe they guided. Where they guide for, Matt? 4 million. I'm sorry, 4 million. 4 billion plus for 2026.
net income.
No, free cash flow. Here we go.
Yeah. So,
Um, adjusted free cash flow between 3.9 and 4.1. So we'll call it 4 billion even free cash flow. I mean, you're starting to get to the point where even on a valuation metric, does it look expensive? Okay, call a spade a spade. It looks a little expensive here. Not nearly as much as it did last week. And if you think about if they can maintain some of this, and it looks like they're going to maintain a lot of it because they're calling for over 7 billion of revenue next year. So this may not be that crazy. I think Palantir deserved, whether you agree with the valuation or not, I think Palantir deserved to be significantly higher today. I think that if the market was not going through a SaaS sell-off, Palantir would have been 180 today. I really do believe that. I think it should have been much higher. And there's a lot of good companies that are getting sold off. Palantir, there's no reason for it to sell off. It didn't sell off. I mean, compared to where it was, I can see a case where it gets back to all-time highs over the next 2 months. AMD selling off after hours makes no sense. I am not an AMD shareholder, and it's probably one of my biggest mistakes selling it, but is what it is. The fact that they beat by 21 cents on EPS and beat by 630 million on revenue, and as big as they are, their revenue grew by 33.8% year over year. I mean, this is not a normal market. And I think it's part of its information flows so quickly. People make rash decisions because we have so much access to being able to sell. And I think there's going to be a lot of good opportunities. We have good opportunities now. I think that this is just overdone. I would not be shocked. I don't want to call a bottom, but I would be shocked if this continues to happen throughout the week in technology. Obviously, the markets can go down. We could see 66 or 6,700 on the S&P before it makes all-time highs. It can go down. I just don't think tech is going to go down much further than it is now. Microsoft here doesn't make sense. It's too inexpensive. You have Meta, too inexpensive. I don't think these companies are getting enough respect for what they put up. I think that people worried about OpenAI revenue as part of the RPO, and as you're growing at 37% when the street wanted 40%, get over yourself. Just every analyst, get over yourself. Stop it. It's ridiculous. Try to go build another Microsoft. Have fun with that.
Heard to hear first. I mean, the thing that with Palantir that amazes me, right, is, and I was having this conversation with Doug earlier on the phone, was this is $7 billion in year 2026 in revenue, right?
Right.
So you mean to tell me that the exit rate on a quarterly revenue, we're going to start at 1.5 in Q1. So by April time, May time, we're going to know what that looks like. But this time next year, I feel like we're going to be seeing potentially easily 2.3 billion, right? In terms of quarterly run rate. You could see 2.5 billion. So, and that's just an initial starting run rate, right? That's coming into the year. So if you start doing some math, easily by 2027 full year, you're going to have probably close to $10.5-11 billion in revenue. And in 2027, you're thinking probably close to, in that respect, 6 to 6.5 billion in net income. Maybe adjusted ops income is a better way to look at it, because net income, that's probably looked at on a GAAP basis, and you do still have 200 million a year, 200 million a quarter or so in share-based compensation. So we'll just say 6 to 6.5 billion in adjusted ops income. But Steve, when we enter 2027, the company will have $10.5 to $11 billion in cash on hand. They have no capital. They have no capital expenditure.
I get that. I don't
what the fuck are they going to do? So anyway, like they have been trying to keep buybacks at about 5% of adjusted ops cash. It went down because this past quarter was extremely good, but the hope is if you think about it, if you were to do 5-10% of ops cash, you're going to actually start to offset about 30 to 50% of the share dilution. Hopefully, not using 30 to 50% of the ops cash. I'm saying if you use the 5 to 10% metric of saying, okay, let's do 5% of whatever ops cash we get and use it for buybacks, you're going to offset, half of that share-based compensation that you're giving out every year. So I think that's a good story, because everyone's always been talking, and it has slowed drastically, the amount of share-based compensation, and we're down to like less than 1.5% dilution a year, unless there's some sort of big SBC event. But to me, I think we're getting to a place now where you're not only going to be able to attack it from a top line growth perspective, but then you're also going to be able to attack it from buying back actual stock and reducing the share count over time. What I'm looking forward to seeing is they spend another. Sorry, let me get my numbers here. They spent another $100. Nope, that's wrong. They spent another 19 million, in share buybacks. So small comparatively, but cumulatively, they bought 139 million. So they still have the 860 or so million in share repurchases left out of that 1 billion authorization. So I wouldn't be surprised if in 2026 we see that upped, based off of the current run rate of the company. It was only 2% of the cash flow from operations for this particular quarter. They bought back shares at around $170, but I'm still waiting for the actual 10Q to actually read it, or 10K to actually read it all. But yeah, it's interesting. Net dollar retention of over 130.
139%.
Like, look at this. This is the most insane part, right? Like, we talked about acceleration growth. This is the trailing 12-month graphic here. Like, this is insanity. Look how crazy it's starting to accelerate. Like, you went from last quarter 3.9 billion to almost increasing it by 500 billion in one quarter in trailing 12-month. Like, that's just insane.
It is.
And if you look, it's even more insane looking at it on just the quarterly revenue. Like, this will the exit rate by this year in quarterly revenue might be this doesn't include the most recent quarter for revenue, but the trailing 12-month does. So this went from 1 billion in 2Q to over 1.4 billion in the fourth quarter. You would increase the company's revenue generation on a quarterly basis by 40% in 2 quarters. And you're going to be able to exit 2026, I believe, at 2.3 to 2. I'm going to say it's 2.4 billion. I'm cautiously optimistic. You're going to be exiting 2026 with 2.4 billion. So that means you're easily going to surpass 10 billion in revenue on a trailing 12-month basis in 2027.
So I have not done all my stuff yet for it. I'm going to give you 2 charts that I just made while you were talking.
Steve charts are the best charts.
Let's not go that far. I'm going to put them on a different page. All right.
Fucking painting, bro.
It's amazing. It's amazing.
Like, I'm just looking at you, and all I see is this cow in the background. Like, what?
And now I got to figure out what I'm going to do when I take meetings. Am I going to move the painting? Am I not going to move the painting? Am I going to have to explain what the hell that is? Like,
Steve, don't change who you are. Own it. I'm the White House quant. You think I can't live that down at work?
Yeah, nobody knows I have a YouTube channel at work.
Well, nobody knew I had one until
the White House
up on the goddamn White House page.
All right. Look at this. You have an S curve happening with customers. Plain and simple. The big thing, and we're very early Palantir. This was a black box back here. That's what everybody said, right? This is a black box. Is U.S. commercial going to exceed? Is it going to grow, et cetera, et cetera? Well, I'm sorry. Yeah, here we go. So is it going to exceed? Well, yeah, it did. And it kept going and going and going and going. And we're seeing a ton of growth in the contracts. This is what I care about. In 2025, what is that? 700 contracts for over $1 million or so, that area. It's absolutely incredible. And when you think about how they calculate net dollar retention, it is no deals over the past 12 months. So now you have 139% net dollar retention rate, and all of these deals are going to be involved in 2026's earnings with potentially upselling. Dare I say something crazy?
Say it, Steve.
Their guidance may be sandbagging. Dare I say that? They're basically telling us they're going to grow at 61, 62% year over year. They may be able to pull a rabbit out of their asses and do 70% year over year. I mean, we've never seen anything like this. This is incredible.
I'm the thing that I was most shocked by, I think I heard the number correctly, that top 20 customers revenue grew by like 40% year over year or something like that. It's like you have your largest customers growing by that margin. It's pretty astonishing. What was something else that I was keeping track of? Yeah, so cash on hand, 7.2 billion. The margins were over 50% for the majority of them on like an ops income basis, and then
You know what, Matt?
cash from ops.
I need a nice, fresh, cold one.
What flavor, Steve?
Strawberry.
I would, to be honest, like I wish we were at the hotel or something when you're handing those out, so that way. But you had your ice pack right there. I wasn't thinking.
Yeah, they were cold, man.
I should have kept them on ice. Which one's your favorite?
Blueberry pomegranate.
By what margin?
Good margin. Good margin.
Should I regret not having the blueberry pomegranate?
No, because you like mango.
I like blueberry pomegranate as well.
I don't know why you didn't take one.
You're not wrong, Steve. Never are.
Look, Palantir is an amazing company. I will be doing an article this week on them. I need to update all my numbers and really look at it, but I may upgrade them to buy from neutral at this point.
I bought more on Friday.
Well, I saw you and Amit both did.
Well, he did today. Didn't he buy today, or was that yesterday? I don't remember. He bought more than I did, that's for sure, though. I don't have that Amit Kukrage money.
Well, this is a great company. I think it deserved to be higher. I also don't think that a lot of these SaaS companies deserve to be where they are. I mean, look, Salesforce being under 200 is crazy. ServiceNow being at 109 is crazy. NVIDIA touching 178 today is crazy. Like, what changed for NVIDIA? A bunch of fake headlines about OpenAI. I don't know. Oracle, I'm not going to defend. I think Oracle is probably fair value at this point. I've been saying that they scare the shit out of me. I think their debt offering is just a bad PR nightmare for them at this point. But SoFi down. I'm so far behind. I have so many articles I need to write. This is crazy. SoFi under 22.
I like
the market is telling us they truly look at this as a bank. Yeah, JP Morgan upgraded them to 31 or 32 price target.
I still haven't digested SoFi's numbers. I need to. That's a mistake on my part. But from everything I've heard, the fact that it even sold off is surprising. So I like I actually like SoFi. I mean, the reason why I told people I sold SoFi wasn't because I disliked the company, wasn't because I didn't want to own the company. It was just because I wanted a higher concentration in something else. And to be honest, I don't understand why I can't also. I mean, I already keep track of what SoFi is doing to a large extent anyway. So I might. I don't know, Steve. Do I bite the bullet? I don't want to add because I'm adding Symbiotic now. I don't know if I want to add Symbiotic and SoFi. Is that too many S's? Might be.
So what? Your real portfolio or the small portfolio?
No, the big boy portfolio. The big boy got to eat portfolio.
Oh, got to eat.
On the Warpath to 8 portfolio, Steve.
The Warpath to 8.
The Warpath to 8.
Okay.
It was funny. I was like, well I forget. Tevis was telling. We were talking about something. I was like, Tevis. We were smoking. We were at the cigar lounge, And then I forget what he was saying, but I was like, Tevis, I don't care about any of that. It's baby. That's for the baby birds type shit. I was like, the only thing I care about is going from 7 to 8. He's like 7 to 8 million. I was like, what importance is that? I was like, no, my guy, think bigger. Figures, my guy, figures.
I know what you meant.
You did. Tevis isn't used to hearing that in his Maple dollars.
Wow. The Maple
That's a joke. That's a joke, everybody. It's a joke. Don't get shook.
Pretty heroic. Well, tomorrow's going to be interesting, and if things keep going down, I'm adding to a few positions. I should have added to Zeta. I was in meetings all afternoon. We'll see what happens. I'm shocked it got under 17 today. Let's talk about PayPal.
Oh my God, do I want to talk about this?
Am I crazy thinking that get to 35, please, I'm buying the hell out of it? Like, am I crazy?
What's crazier, Steve? You're not the crazy one. What's crazier is they keep buying back their own stock, which I kind of understand, but like take a book out of Google, or Google's book, right? Like take a page out of Google's book, buy some companies that completely differentiate and diversify you into businesses that you don't have expertise in. Right? Google now has a large position in so many different companies, including SpaceX and now XAI. Why the hell isn't PayPal thinking the same thing? I just don't understand. You can do both. You can hire a small venture management team and couple that with trying to innovate inside your own business as well. And so I just don't understand that while they've spent so much money buying back their own stock, they could have put money into so many other things and tried to partner as well with so many other companies. And I think that it's just been, I had higher hopes. I was hopeful because I get lunch with Roy and I trust Roy. I'm not blaming this on Roy. I mean, Roy doesn't work at PayPal.
Roy does not work at PayPal.
I, was hoping for a win for my buddy.
So the problem is their guidance for 2026, slight decline, transaction margin. You have operating expenses on non-transactions growing 3%. GAAP EPS, mid-single digit decline. They're expecting $5.41, or they're saying fiscal year 25 was 541, mid-single digit decline. But adjusted free cash flow, $6 billion plus, and they're going to do $6 billion of buybacks in 2026. I mean, this is now a company that is so broken. It's broken more than what I was even saying before. Where's the market cap at? 40 billion now? I mean, you're basically saying that you're going to buy back 15% of the company at the current valuation over the next year. Take the damn thing private at this point.
I mean, what do you think that the HP ex-CEO coming in is going to be beneficial? Or do you think it's going to be more of the same?
I think they should put me in as CEO.
What would you do, Steve?
First thing I'm doing,
buy everyone drinkable yogurt.
Well, we're going to have a fridge of just drinkable yogurt, okay? But enough with $6 billion of buybacks. Enough. The market doesn't fucking care.
Yeah.
They haven't cared. And this is what I was saying to Roy last week. The market doesn't care. I said it to Chris also. The market doesn't care. Let's look at this, okay? And this is a harsh reality for Alex Chris, who didn't listen to me. I said it publicly to him on X, didn't want to listen to me. Okay, I have no fucking clue what I'm doing. I'm not the CEO of PayPal. That's fine. But neither are you anymore.
Oh,
Just saying. Just saying, right? So you look at the past 5 years, it's down 83%.
that was the most savage shit I've heard all day. No, you're a fucking animal, bro. Let's go.
You get me going. Sometimes I just don't care. And that's why I say I don't care, because I'm going to say what I feel. Like, listen,
It's true.
I may not be right in what I wanted to do, okay? But it probably would have been better than this shit. Now, this is a horrible chart, and we bottomed short term after the huge decline in the middle of 2022, and then basically flatlined for the next 3.5 years. Okay, 2022 is right here where my mouse is. We'll make it bigger.
22s. Sorry.
So you got 22, 23. Oh, it's not even updated yet. So we're still on TTM, not even 2025. Okay, look at the damn buybacks. $4.5 billion in 2022, $5.3 billion in 2023, $6.4 billion in 2024. And let's just call it $6.2 billion for this year. All when stock is flatlining between 55 and 75. I'm sorry, the market doesn't care about the buybacks. And the fact that the numbers underneath the hood are very compelling, the market has no faith in the business. You have two options. One, stop with the excessive buybacks. Send half of it through a dividend. Put up a 3 or 4% dividend and actually reward your long-term shareholders and put cash back in their pocket, because you have created so much erosion in the share price that every one of their positions is red. So give them the money back in dividends and stop the happy horse shit with $6 billion in buybacks. Now, I get it. The buybacks reducing the EPS. I get it. But that's a business problem. And you can only fake the market out for so long, where the only reason that you have EPS growth is from your buybacks. Now, you either fix the business, go on an acquisition spree, or juice the dividend, or take it private. They didn't really do anything. Now the question is, does a company come in, and I think it's stupid that people were insinuating SoFi should buy PayPal. That was ridiculous. But is it crazy to think that SpaceX and XAI conglomerate buys PayPal at this point just for the underlying cash flow? You're picking it up for pennies on the dollar.
I don't know. I think Doug said that to me earlier as well. I don't know.
It would be sweet revenge. You can integrate it into XAI for all the payments, not really change much of the business, and you're getting $6 billion in free cash flow for $40 billion at this point, $42 billion. I mean, think about that for a sec. To drop in the bucket at that point pays for itself in freaking 7 years.
The insane part is Elon sold it for what, like $1 billion, $1.5 billion or something to eBay. And then with not solely, right? But he walked out of there with just under $200 million. Look how much value Elon has generated from that company. And yeah, of course, PayPal has obviously grown into a $40-odd billion company. So it 40x from when they sold it, right? But you think about all the other value that's been generated with that 197 million that he basically took off that sale. And then if he comes back and purchases it, how crazy that would be.
It would be so savage. It would be a great story. But even if they don't buy it, why wouldn't a Visa buy it or a American Express? The fact that none of these companies have acquired PayPal over the past year shows that nobody really has a need for it. And is there still going to be a need for PayPal in the marketplace in the next 5 years? I have no idea. It's not the sector that I really follow. I know that merchants love it. I don't use it. I mean, I have no need to use PayPal at all. I do use PayPal at all,
Only when I need to.
but it's not like if you're going to use it, like just a couple times a year. If you're buying something on a website that seems
Yeah.
somewhat sketchy, I mean, it's great for that. But I mean, how many times do you ever do that? Most of the purchases I make are on freaking Amazon or something like that.
Mm-hmm.
You know, so I'm not using PayPal for anything. And then the whole idea with Venmo, I mean, Zelle is freaking so much easier. It's right there.
Yeah, I use Zelle if anything.
So I think that they got a lot of problems. I don't
I
know.
guess the question is, Steve, is if you buy it, you're probably gonna have to pay a premium. So you're gonna buy it for 45, 50 billion, I think. What's the market cap? It's like 35, 40 billion, you said?
Well, they're saying 49, but that's not updated after today's drop. So it dropped 20% today.
So it's 40 billion. So do you think that the future cash flows discounted are worth 40 billion? That's basically what you're saying. If for somebody to buy it,
It's
right?
cheaper than tobacco companies. Think
I
about
get
that.
it. You're not wrong.
It's got a PE of 9.77. Where's Altria Group?
But that's undiscounted, Steve. That's what I'm saying.
Altria Group's an 11 PE and does more free cash flow than PayPal. So I don't know. All I know is the market hates this company. The market hates the buybacks. They've been doing the wrong thing with the buybacks because they've been buying back shares that have continuously gone down, and all the capital that they've thrown into buybacks has been eroded to some degree. Because if they were buying back shares at 80, 70, and 60, all those shares that they bought back are worth significantly less now. But what they should have been doing is throwing out that cash in a dividend back to shareholders. Give them something back. Because unfortunately, this is the reality. Everybody loves buybacks. I love buybacks too. It's the most efficient way to allocate capital back to shareholders. Here's the reality. It's not cash back to shareholders. Okay. It's that you don't see it in your account. You don't feel it. Now, the real answer and the financial answer is, well, now your shares represent more EPS because there's less shares on the books. And even if they generate the same EPS year over year and don't grow, your shares are still representing a larger piece of the pie because that same EPS is divided across less shares. Great for a techie answer, but in the real world, people aren't seeing that cash, so they may be giving $6 billion in buybacks. No shareholders are seeing that because the stock keeps going down. So if you put that toward a dividend, they'll feel that. And I swear, we'll never know it now. If PayPal had a 4 or 5% freaking dividend, I really do believe that a lot of people would have got interested in the stock. But we'll never know now. They did a bullshit less than 1% dividend. Like, what are you thinking, Alex, Chris? Like, what are you thinking?
Yeah.
No dividend ETFs is going to care about that. People that are investing for income are not going to care about that. You're 1 foot in, 1 foot out. Don't do that. I mean, they could have very easily. I ran the math last quarter. I think it's something like they could have done a 4% or 4.5% dividend and still done 2 or 2.5 billion in buybacks. Like, they have that much free cash flow. I think they screwed that up big time.
I mean, prime example is you had Amazon in the same time. Well, they bought since 2022, looked like $22 billion worth of stock of their own company. And you had Amazon invest 8 billion and they own 15% of it now, $350 billion company. So It just goes to show you, like, buying back stock is not always the answer. And I feel like sometimes it's like a 1970s, 1980s approach of ensuring that you're returning cash back to shareholders. But I think we're in a new age. I think, I've been rereading Zero to One by Peter Thiel, and it just goes back to talking about you're wanting to buy future cash flows. So if you're not innovating, you're dying, like, in that respect. You need to continue to focus on how you continue to solidify your long-term uh distributable cash flows. And so if you're just buying back stock and not continuing to innovate, you're basically not going to continue to increase the value of the cash flow. So would a Visa buy it for, let's say, 40 to 50 billion dollars at a discounted value of, say, 6%? Like, you think about it, you're like, well, shit, yeah, the price to earnings without including a discount value is a price to earnings of 10. But then you take into account that you have to borrow that money at 5-6% to be able to make that purchase. Is it really worth it on an NPV basis at that point? Probably not, unless you're able to utilize that to invest in other things. That immediate cash flow that you get is able to then be invested on a return on capital of, say, 30-40%. Then it's worthwhile, I would say. But if you're just going to continue to do it just to buy the business and not utilize that cash flow for anything other than just
Well, they're
added
doing it
dividends
to
or
prop
something
up
like that.
EPS because their EPS isn't growing without it. I mean, they tried taking a page out of Apple's playbook, but the difference is they're not freaking Apple. They don't have 2 billion devices out there in the ecosystem. They're a freaking payment processing company.
I mean, I'm curious to see what ends up happening because everyone talked about their stable coins and things like that, and an interesting piece that Tom Lee talked about um on the compound on Friday was Tether and USDT as a stable coin. Just because so many people have money in USDT as a stable coin, they're making like $25 billion a year in income.
I mean, I just pulled up the report. Think about this. PayPal is such an undervalued asset that the market has ran off. So I don't even know if I can use the word undervalued anymore. But look at this. Cash equivalents, and investments totaled $14.8 billion. And their total debt, 11.6. I'm willing to bet that that includes capital leases because I don't remember their long-term debt being that much. Even so, you take capital leases and everything else, you still have 3.2 billion in cold hard cash on the balance sheet at a 40 billion market cap doing 6 billion in free cash flow. I mean, if nobody wants to buy this company at this point, there's something we're all missing. Like, this company really is a cash machine and it's just not doing anything. And here's the big thing. How do you think about this, Matt? Because it goes to what you just said, innovate or die, right? How the hell is your EPS falling? Okay, mid-single digit decline, $5.41. How is your freaking EPS declining after allocating 20 billion to buybacks over the past 4 years? Think about that. It's not like this company isn't wildly profitable. There's something in here that the market, you can't even say that this is a good buy here because you're going dumpster diving. Sure, maybe this gets back to what, 45 or 50? Maybe. The market's never going to put a premium on this company. This shows it right here. I showed how much they freaking did in buybacks over the past 4 years. And now your EPS is declining after reducing the share count by that much. That's crazy talk. Yeah, I don't know. I mean, I'm trying to find an angle because, like, if this goes to 35, it gets really, really interesting but it's more interesting on somebody's going to step in and take it over at that point. Not that the business is going to get any better.
Yo, PayPal board, make me and Steve co-CEOs.
Seriously, make us co-CEOs. We'll figure out a way to freaking do something different with this company. Have PayPal go buy OnlyFans. And then cut out the expense of payment processing. Just saying. Probably better than what they're doing now.
They could do so many things. Like, you think about it. Prime example, right? Is you think about Twitch, you think about YouTube.
Well, Twitch is owned by Amazon. But yeah, I get where you're going.
But wait for me to finish my train of thought.
Yeah.
So there's so many donation websites now. So you think about, like, YouTube takes a large, I mean, they take less on memberships and they take less on donations, but YouTube ad revenue is like I forget what it is. It's absurd. We don't even get half the revenue that YouTube gets. But think about 30-40% or something of the donations, memberships, and everything that's immediately given to YouTube or Twitch. PayPal could have easily created something that made it only 10 or 15% and still attributed it to the person. And I know there's other things out there, but PayPal could have come out with a better one. You know, there's a lot of unique things, and I'm sure PayPal could have innovated and come up with that. They just
Matt, read these numbers. They're still freaking growing. Their revenue grew 4% year over year. Their freaking operating income grew 14%. Their net income grew 26%. Their earnings grew 35% year over year.
Why is the ops cash going down?
Where are you seeing ops cash?
Last line item in Gap.
On Gap? Okay. That I have no idea why. Went down 14%. But their free cash flow still pretty freaking good at 5.5 billion, and they're saying free cash flow is going to increase to 6 billion in 26. So the question is there something structurally wrong? Because these numbers, when you just look at the fiscal year 25 numbers for a company that's $40 billion, these numbers are incredible. They're more profitable than Palantir. Palantir's got a 10x market cap. Not saying that PayPal should be a $400 billion company. I'm saying that there's either an existential threat to PayPal over the next several years, or we all have this wrong.
That actually wouldn't be a bad idea if Berkshire put somebody in charge and bought this.
Yeah, but what can you do you need another business segment with PayPal at this point?
Yeah, you do.
That's the big thing. You need another business segment. Unless Berkshire says, you know what? We're just going to acquire them just for the hell of it. Let nature run its course. We'll get the free cash flow back, but we're going to do it so we make all of our other businesses less expensive to run and integrate the PayPal rails and everything to all their businesses to decrease organizational and network-wide transaction costs.
Just needs a rebranding, bro. I think, being spun off from eBay, I think really just they lost all their innovation. And they just relied on.
Man, people must not have tuned in the beginning. People are acting like I'm bearish Palantir. I said I'm probably upgrading them to buy. This is one of the most incredible cores I've ever seen. Like, go back like 30 minutes in the show.
Steve, people think you're shook.
I'm not shook. I said it's either going to 100 or 200. I had no idea which one. And I think that they're sandbagging on revenue growth for 26. But
Yeah, I think they're
regardless,
sandbagging.
PayPal needs to do something. I don't know what it is at this point, but these numbers are so good for a company this small. It's incredible.
I don't know what to say, Steve. It's interesting to see how well some companies do by appropriately allocating, investing their capital, i.e., Amazon and many other companies that are now bearing the fruits of their investments. And then you have another company that just refuses to think to the 21st century.
I don't know. We're not going to solve PayPal's problems on this show. They're probably not going to make us CEOs. That's fine.
Can you imagine though?
They should at least call us like, hey, what the hell should we do?
The first people be like, so Matt, Steve, what are you doing in the first 100 days? And I'd be like, well, I don't know about Steve. Steve can watch me, but I'm just going to sit there with a cigar in my office and just think of shit to buy because this company is going down otherwise.
100%. Have become a Bitcoin treasury?
Might as well.
Might as well at this point.
You'd be making more money. Instead of just blowing up. You think about it, they could have bought the 5% of Ethereum that Tom Lee wanted to buy. They could have bought it. And then they could be generating money for that.
100%. I'd rather them not do any buybacks and just buy Ethereum and Bitcoin at this point.
What other companies could they buy that are just...
I don't know. But I don't know there's any help for them either, to be quite honest.
I will say it will be fun to watch. It'll be fun to watch the new CEO and see, because Alex Chris had his try, right? Like he rebranded, and it kind of just fell flat. So I'm kind of curious if the same guy is going to go down the same route, or if he's going to just try to auction it off for pennies on the dollar. Sometimes, and I'm very curious where. Sorry if you hear the rain; it's pounding right now.
Can't hear anything.
Okay, good. I don't know. Sometimes people just stay in companies just to collect the paycheck, and they don't actually. They're afraid to make any changes because that might disrupt the main business, right? Versus me, I know to me, I'm always just like an innovator die kind of guy. You need both. You need to be able to. I agree with you. Dividends should have been a piece of it a long time ago, not just recently, but a long time ago. Coupled with buybacks, I think the buybacks is key as well. But you also need to continue to grow top line, and they are growing top line. So I guess that's the tough part. But investing in something that's completely innovative, and I guess they tried with the stable coin, and they tried, but it just they needed to acquire something that was completely different to themselves, that somebody else operated.
I'm surprised AMD got taken to the woodshed also. But there's a lot of companies that aren't making sense right now. Did people not like AMD's results? I'm going through them right now. They're really freaking good.
What did they drop? I saw they dropped after hours, but what exactly are you talking? I didn't get to
They're down 8% after hours.
Lots of opportunity here, Steve.
Yeah, I mean, they came in with 34% year over year.
So what did people expect? 50?
I mean, this isn't a small company.
It's not. I know it's a sore subject for you, Steve.
They went from 26 billion to 35 billion in revenue.
I mean,
This is a great freaking company that did not deserve to go down today. And what changes for Nvidia? Nvidia didn't deserve to go down today. Oh no. I think in 6 months we're going to look back and be like, we could have bought these companies at what price? I mean, Microsoft. Is there a reason Microsoft is flirting with freaking 400? I mean, that was a good print last week.
I wouldn't be surprised if you see Microsoft in the 600s in the next 18 months.
I agree with you. I mean, look at this chart. This isn't some little bullshit company. I mean, it's almost like people are losing confidence in Microsoft that they're going to get killed by freaking AI and people aren't going to need Microsoft Office or any of their software products, and that the RPO from OpenAI is bullshit. I'm sorry, but this is ridiculous. And it doesn't look like it's stopping.
Steve, what about good old Walmart? People are asking in the chat.
Dude, freaking Walmart hit $1 trillion today, I think. Yeah, at one point they hit $1 trillion. It doesn't make any sense to me.
The P to E of 47.
Yeah, it doesn't make any sense. And now, spoiler alert, I did ask Josh Brown this. So I did ask him this to get his opinion because I cannot figure this out. And he gave a really good response. So I don't want to really address it here. The only thing that I'm going to say on this is I do think people will enjoy the conversation, is that I think people are looking for a flight to safety in the wrong places. And I don't think this is the time for a flight to safety in traditional names like Walmart and Costco. They're not as strong as Microsoft, Meta, Amazon, Alphabet, Apple. They're just not. And the fact that they're catching a bid and those companies aren't, it tells me that we're in an interesting time in the market. And people want things that are considered durable. And for some reason, they're not considering big tech durable, which does not make sense. Because when you think about Amazon versus Walmart, I would think that Amazon should get a better multiple because not only do they have the same stuff as Walmart, they also have the largest cloud in the world called AWS. And Walmart has a PE of 47 and Amazon has one of 34. Figure that
out. Steve, because we were busy on Sunday, we didn't get to do the small accounts.
I haven't even updated mine. I figured we'd do a double episode on Saturday.
Okay.
And go over it. Did you update yours? Oh, I mean, all I did was roll. But I'll tell you what I did. I rolled BMNR and Zeta puts, and I bought more QQQI. But I don't have anything right now or anything.
What is cost still getting hit? Costco?
I'm not really paying attention to Costco. Let's see where it is.
No, it bounced. All right. Well, I was expecting Costco to be getting hit. Visa, Apple. Meta's back below 700. Amazon's taking a hit. I'll say, you know who has been resilient is Google.
Very.
To this pullback.
But don't forget, they have such a huge position in SpaceX.
True.
Huge. So all the news the past week has helped them.
Broadcom's rolling over.
Whoa. SanDisk went to sit. Don't. What?
What's that?
Oh my God.
What's that?
People could care less about chips right now because there's no shortage of them. But there's a shortage in memory, so it's all freaking pumping. I mean, think about this. This is gone from December 31st. Look at that. It's basically tripled in a month and a half. Not even. That's wild.
Senor Steve, are you buying more VG? Or are you done?
It's not at the top of the list.
What is at the top of the list, Steve?
Right now,
Currently, right now.
Zeta. I should have bought more today. It didn't go down enough. I said I would buy more at like 15 or 16. I should have just bought more. I will probably just buy more tomorrow if it's under 18. I do think that it's a baby Palantir.
Go deeper on that. Why is it a baby Palantir? You mean in terms of future growth potential, or do you mean the fact that what they're doing with AI?
So, future growth potential. Here's the big thing. This company is a $4.5 billion company right now. They are 15 consecutive quarters of 20% plus year-over-year growth, 18 quarters of expanding adjusted EBITDA margin. This is a company that just did a good acquisition with Marigold. They're integrating OpenAI models into it, into their Athena product. And when I go through the financials, it's very interesting. There is more cash than debt on the balance sheet as of right now. I need to see what it looks like after this acquisition. I don't remember offhand if it was a combination of cash and stock, all stock or debt, but as of last quarter, they had 197 million in debt, 385 million in cash. Low share count, 240 million shares outstanding, very low share count. They are free cash flow positive. They are on the verge of becoming net income positive. And when you look at how their operating income is looking, this reminds me of where Palantir was. And they are in a sector that has been beat up. Can I see this becoming a $20 billion company? Yes. If they become a 20,
buybacks.
Yeah, they become a 20. I mean, that's the big thing for me. I'm not looking for this to get to 200 billion market cap. I'm not even looking for it to get to 100. I'm not even looking for it to get to 50 billion. 20 billion market cap in a couple of years is attainable. And that's a huge ROI. And it can easily be done. I mean, they're already doing 1.2 billion in revenue. Last year they did $1 billion. They're going to grow around 25-30% this year. The numbers are interesting. The numbers make sense. And I think when software makes a comeback, this will be at the top of the list. It'll be looked at as a catch-up play on AI. It's kind of the same thesis as Salesforce, but for different reasons. I think there's good software companies out there that you can pick at. ServiceNow also, I think ServiceNow is very misunderstood, but Zeta has a lot of potential in a space that's misunderstood. So
I heard we have a guest in the chat.
Oh, we have a celebrity in the chat. Hold on. If he's not going in the sauna, maybe he can make an appearance.
He's not going into the
I mean, I know
sauna.
that he missed the sauna over the weekend, so
He's probably been living in it, bro.
he's probably been sweating out all the pizza.
It wasn't. I don't think that was Tanner's typical diet.
No, definitely not. Definitely not.
Interesting. Yeah, I mean, somebody say that Zeta's on a roll.
I mean, it's definitely picking up a lot of people in the retail community. A lot of people are starting to cover it. Look, the big thing for me was the fact that they were doing 50 million of EBITDA, and their CEO went into the boardroom and said that we're redeploying 400 engineers. We're going to make nothing for the next 3 years. This is what we have to do to future-proof the company.
I mean, but that's what it's kind of what Tesla's doing. Obviously, not to the same extent. It's apples versus oranges, but when you see something, you see something. Even if that means, like I stated, the short-term sacrifice of short-term revenue and short-term net income. It's about long-term cash flows. And if the market doesn't eventually see it, the potential for the long-term cash flows are going to come from that. They're going to leave you by the side of the road. I think that's what's going on with PayPal. And yeah, I think some people are saying, well, the Model S, but the amount of cars they've been selling from the Model X and the Model S for years has been in decline. So use that for something that is going to generate higher margins. The margins have shrunk. The margins aren't the 30% margins that everyone was expecting them to have forever. So to me, I would rather pause a
Look at where they
declining
are.
business line.
Revenue accelerating in 26. 34% year-over-year growth in revenue, acceleration. And then look at EPS. It's not even expensive at 28 times.
It's not even 28 times, Steve. We're in 2026.
No, I'm just saying, right? Because they haven't reported Q4 yet.
Yeah, but
so 20 times their expected 26. Now, this is normalized. It's not GAAP. But still, this is not an expensive company.
Steve, I'm curious about your thoughts. I've never asked you about this one. Dutch Brothers.
I've never had Dutch Brothers. I don't have a thesis or an opinion because I've never tried the product. With food companies, I got to try the product.
Yeah, but I'm curious, just from a numbers perspective, I'm curious where you think they're at.
Bros? Man, this can be live on the spot. I've never really looked at them before.
Everything Steve wanted.
All right, 9.9 billion market cap. You still in it?
Yeah, still in it.
Still growing. Not very profitable. All right, let me go back to their expenses real quick. Yeah, so the cost of revenue there, what are they doing? Adding capital leases in there? Because that's okay, because that's not a lot gross. Expensive business to run. I will tell you one thing I did not like about them. They're predominantly drive-through, correct?
Yes.
That's one thing I don't like.
That's
And
just
that's
Steve
probably
don't
why
like.
I stopped looking at it.
Why? Because it's drive-through.
Yeah.
It's I'm curious on an EBITDA perspective. What you think? What's that?
It's a bottleneck problem.
Yes, I see that.
So
the net income, there's a lot of depreciation, so the net income gets pushed down.
It's numbers aren't horrible. It's just not for me. I mean, when I think about it, how it's so hard to scale because people take forever to freaking order. I mean, I don't use apps a lot. I use the Starbucks app all the time. He's like, don't want to be behind somebody saying I want 3 pumps of this and 2 pumps of that. Because I'm likely to say, just whatever they want, I'll pay for it. Give me my fucking coffee. Like I don't want to be bothered by that. So I like walking in, walking out, and not having to wait on a line. Drive through for coffee. I mean, how long does it take to get a coffee from there?
Oh, coffee's pretty quick. It's more about the line that lines you up, but there is a walk up window as well.
Is there a walk up window?
Yeah.
Do they have an app where you can just order it and have it ready for you? Okay, so that gets rid of some of the bottleneck. But I don't know. I think it's a hard industry because Dunkin' has its own clientele that's never going to go anywhere else. Same with Starbucks. So
the annual unit volume on average is $2 million
per location.
per location, and about 30% ops margin.
Yeah, I think that there's easier places to make money than that. There's so many alternatives that I just don't want to allocate capital to that. I'd rather go dumpster diving in SaaS at this point.
I feel it. Feel it.
I mean, Salesforce under 200 to me looks freaking crazy. And maybe it goes to 150. Maybe I'm wrong. But they gave us guidance out to 230 in September. I mean, out to 2030. I'm sorry, I said 230. They gave us guidance out to 2030. They showed us their revenue growth and their free cash flow growth. No, it is still a story nobody believes. And I think, once again, they're going to report at the end of February. Nobody's going to believe it. Maybe it sells off. But Salesforce, by the numbers, it should be a $300 stock. SaaS is out of favor right now. We'll see what happens.
Steve, you're the man.
No, you are. You're a freaking living legend. I mean, got a lot of things. So which one's tomorrow? Amazon or Alphabet?
Amazon's on Thursday.
So tomorrow's whatchamacallit, freaking Alphabet. I will
Maybe they
not
are
be
both.
home for it, but I'll be home for Amazon on Thursday if you want to do something.
I have jury duty Thursday afternoon, so hopefully I get kicked off the panel very early. I have to be there at 12:30 p.m.
All right. Jury freaking duty. Like it.
Yeah, the White House called. Like, actually, I'm biased because I was on the White House live page, and they're like, "You're free to go."
Free to go. Heard it here first.
Heard it here first. Free to go.
Well, look at Sam.
Speaking to English.
Love that. Love that. All right, so let's end it on this. Are you buying anything tomorrow?
What I need to stop doing is call the White House and get you off. What I need to stop doing is pussyfooting around on Zeta. Sorry for the language. And really formulate an opinion as to whether or not I want to buy.
We got breaking news. Sorry, Matt. Gotta do it. We got breaking news.
June's here.
Cisco Systems has made all-time highs.
Really?
Not that anybody cares except for me. But Cisco Systems, after 2.5 freaking decades, has finally made new all-time highs.
Where's your bill?
What? Oh, the bell. I actually have one.
I like your bell more.
So I can't get a huge cowbell like Amit, but
Shadow government's about to come in and be like, "Did you want something?"
freaking This is still, in my opinion, undervalued. I don't think people actually understand how much networking equipment you need for these data centers. And there's two winners in that space, I think, Cisco and Arista Networks.
Yo, that's coming aside, but Steve having a cowboy would be on character.
Anyway, what are we buying tomorrow, Matt? Get a gong.
It actually would be dope. The market's open and it is gone.
Boom.
I don't know, Steve. I definitely, one of the things you need to keep in mind, Robinhood is severely depressed here, surprisingly. BMNR is down in the low 20s. Coinbase has been cut in half. I need to understand if I were to do a crypto trade of any of these. Maybe I just keep buying Ethereum and Bitcoin, but I think that there's a good proxy trade choosing one of those companies.
Can I ask you something?
Yeah.
What's the point of even buying Bitcoin anymore? And here's why I ask that. Bitcoin is supposed to be a store of value. If the new legislation allows stable coins to throw off yield, why wouldn't stable coins be the new store of value? Like, why does anybody care about Bitcoin still? I can't get it through my head.
It's a deflationary asset versus everything else.
Why? Because
That's one
there's
reason.
only a finite amount of it.
Yes.
I don't know.
That might not be the best answer, but it's an answer.
No, it is an answer. I don't know. All right, so what are you buying tomorrow? And are we looking at super micro again?
I literally was looking at that. Did they report what happened?
Yeah, they're up 7% after hours.
That's it. Okay.
Yeah, they blew Q2 out of the water.
So what is that? $20 or $32?
Yeah, 31.73. Very good. Yep.
I was literally looking at that because I bought it when it was $29, one share in my portfolio, just so I can always have it in there and keep track of it. And I saw that today and I was like, oh, it's reporting earnings. And I thought it reported yesterday. So I was going to read it. And then it said, no, it's reporting today. When I pulled up the investor relations page, I'd have to read through it, man. I mean, at $29, my biggest fear though is that with the new way that NVIDIA is building their chips, will they need as much super micro?
That's my fear. I agree.
So I might have to do some research about, with the Vera system from NVIDIA, how much do they still actually need super micro or not?
Yeah, I mean, tomorrow I'm probably looking at buying Microsoft and Zeta.
I'm glad I'm not the only one that thinks Microsoft is it's not a screaming buy. It's not dirt cheap.
I would say
it's like if you're looking 10 years down the road, I just find it hard to believe that we're going to be using less cloud than more.
I mean, Microsoft is dirt cheap, Matt.
Dirt cheap?
I'll say it, that it's dirt cheap.
Talk me through that, Steve, because I'm not smart.
All right, so we're going to end on this. Here's your Mag 7, okay? You have 4 that reported, 3 that haven't. Microsoft on a TTM has done $175 billion in EBITDA. $175 billion.
Not enough.
$160 billion in cash from operations. They've spent 69 billion in capex and still putting up 91 billion in free cash flow, trading at 17 and a half times EBITDA, 21 and a half times operating income, 19 times cash from operations, and highlighted in green is the lowest or the highest margin, lowest valuation out of these categories. Meta's still by far the best, in my opinion, followed by Nvidia, but Microsoft is right there. But when we look at current year EPS, next year and following year, okay, putting us somewhere in 28. The valuation play on Microsoft, 18.35 times 2028 earnings, 21.8 times 2027, and under 25 this year's earnings. I'm sorry, it's too freaking cheap. It's too cheap. It's got 34% EPS growth over the next 2 years. When have we ever been able to pay 25, less than 25 times current year and under 20 times forward for Microsoft? It's very inexpensive. These are the companies that are getting sold off, and this is what does not make sense in the market because these are the greatest companies in the market. Nothing changed with Microsoft since last week. If anything, the numbers got stronger. Analysts in the market are just being petty and ridiculous because they didn't get a 40% growth on Azure. That's not realistic.
Steve, I'm with you.
So, yes, Microsoft, I'm probably getting into.
Now, the OpenAI stuff, you're not concerned about the total number?
No. No, because what's the worst thing that happens? OpenAI freaking defaults on their promises. I hope OpenAI fucking fucks up. Let Microsoft acquire the whole damn thing. Microsoft comes out a winner either way. They own 40 what? 8%, 49% of it?
I like it, Steve.
I don't know. I think Microsoft is in an interesting position. If I didn't have a full built-up position on Meta, I'd be buying Meta here. But I got you sleepy, Matt?
No, I'm looking at my phone. But I am sleepy.
If I didn't have
Yes,
built
I
up
am sleepy,
positions
but I'm
on
looking at my phone.
Nvidia and Meta, I'd be buying them here. I don't have a full position on Microsoft, and I think the numbers are incredible. Same with
Numbers
Amazon.
are incredible. They
Same with
like I
Amazon.
was. What's that?
Same with Amazon. I'll make the same statement for Amazon. I want to buy more Amazon also.
Well, the thing that I've and this is a Chris Camillo repeat. It's not me, but there's a lot of data centers that Apptronic wants to use from Amazon that have yet to really come online or have recently come online. And so I'm curious when those come online, how that has a bottom line impact to AWS and total revenue. And obviously, Apptronic is partly owned by Amazon as well. So, all the good stuff, Steve. All
Does
the good
that mean
stuff.
you're buying Amazon tomorrow?
That's a good question. I need to look at my mortgage got paid the other day. I did my normal buys, of which Amazon is in that. I might just look and see how much money I have left over, and maybe I wouldn't mind.
I like it.
I'm a big fan of the. I'm a big fan of what they call Amazon these days, Steve. You know what? Actually, Steve, I actually want to get your opinion on something.
Okay.
So, I want to get to 1,000 shares of Amazon.
Just do it.
I'm not quite there.
Just do it.
Would you sell SPY in an individual brokerage account to buy Amazon?
You know that I can't answer that.
Would you sell SPY to put it into fixed income bonds? I'm just kidding.
You know I can't answer that.
You can't answer that either.
Look, SPY, the so many people are feeling pain right now, but people who are in SPY are not feeling pain. That's the greatest thing about SPY. You're not going to outperform the market, but you're always going to get market returns. Some people aren't excited by that. It's a hedge against yourself. You never have to be correct. I got to tell you, days like today make me be like, I should just put all my money in SPY and not even deal with any of it. But what fun would that be? The reality is, I think it's probably the greatest long-term investment anybody can make.
Steve, you can't do that because that would mean you can't write your beautiful dividend portfolio updates on Mondays, which come out on Mondays now.
I mean, I could.
But not if you're fully in the SPY.
I mean, I could. Maybe we don't touch that account.
I think you need to let people know. Do I want beef and broccoli or chicken and broccoli?
Is that what you're trying to decide right now? What type of Chinese you're getting?
Yes.
Chicken and broccoli and get a thing of freaking vegetable fried rice.
Nah, no rice.
What?
Ooh, or do I do chicken and shrimp, Steve?
I would stick with chicken and broccoli. That's just me.
You're a good man.
You're a good role model. Well, we're going to call it there. Matt is ordering Chinese. I need to do some work. I will have some videos coming out. I'm going to do a dedicated video about the meetup, my thoughts on it. We'll do some other videos this week. I believe Tanner and I will be live tomorrow. Matt, are you live? When are you live this week?
I need to check with Mr. Patel. Technically Tuesdays are our night, but I haven't reached out to him, so I doubt we would be going live in 8 minutes.
Okay.
But I hope that I need to talk to Adam at some point. I wanted to go live with him on his private stock channel. And then
which Adam?
Our guy Adam, the guy that we got dinner with.
Berg?
Yeah.
Oh, okay.
Hot Bergman. And
Talk about a good role model. He's a good role model.
I mean, he got me looking on that Rolex website last night.
I hope he did. We're gonna get dinner with him.
What, you are?
Yeah.
To get his hookup or what?
We don't live that far away from each other.
Oh, you guys are both on the same side of town. Okay.
We're not that far. Yeah, we made plans to when the weather when it's not freaking 10 degrees out.
I mean, it's pouring cats and dogs here, but luckily it's not 10 degrees. But you got to let me know if he's got the hookup. Actually, I'll text him if he's got the hookup. Your boy needs it.
I'm sure he does.
Steve, I was looking at this beautiful. I'll let you go after this. I was looking at this beautiful green face sky dweller.
Don't do it. Don't do it to me.
And it's like 40 grand. I don't know if I can do it though. But it's beautiful, Steve.
The Sky Dweller is a nice piece. I will say that right now.
Beautiful.
I was thinking about getting another one. We'll see what happens.
Which one? Any thoughts?
Yeah, I got a few thoughts. Do I need another one? No. Am I going to get another one? Maybe. We'll see.
I think you need another one, Steve.
I definitely don't. I mean, the last one I bought was strictly for an investment. So.
Really?
Yeah, I'm never wearing it ever.
Ever?
No, I'm likely to either sell it or give it to my nephew.
How much you want for it? Tell me off stream. Maybe I'll buy it. You'd have to send me pictures, but maybe I want it. I don't know.
You know what it is. I showed you.
I know, but I need to see it again.
Okay.
Everything Steve wanted.
Shells, I wore it out of the store because they made me, because I cut the tags off. Otherwise, I would have left the tags on, but no, I consider it never worn. It's been worn for like a freaking half an hour. So
I'd wear you for half an hour, Steve.
anyway. All right, everyone.
You're the man.
We will end on this because we have people saying watches are bad investments, but they have no idea what watches we're talking about. And I promise you, if you buy right, you can do pretty well. So
you can do well.
We're gonna end on that. I will see everybody tomorrow. I believe Tanner and I will be live tomorrow night.
Nice. I'll be watching.
Matt will be live at some point. I think Matt and I will do something on Thursday, maybe.
Yes, that sounds good. If I can get out of getting
Charles knows what's up.
She does.
Charles knows what's up.
You don't understand the Rolex people? Probably because you're not one. Oh.
Heard it here first.
Heard it here first on the White House Quant.
Listen, if it has a nickname, that means you can sell it for over retail. If you can get it at retail and you can sell it over retail, that is a good investment. Just saying. Sometimes 1 + 1 = 3.
Steve's onto something.
Just saying. Anyway.
Steve, thank you for setting up the stream 2 hours in.
Let me ask you, Matt, can we address this? A watch has to be 100,000 or more to be a good investment. What is your definition of a good investment, Matt?
Anything that stores or holds value for the long term or grows value?
Mine is similar. It's something that I can make money on. So if you have a connection and you can get nickname pieces at retail, and if you can sell them on the secondary for over retail, that would be a positive ROI, which would be most likely to most standards a good investment. So just saying.
I've thought about going to Japan, and apparently the used watch market there is allows you to do some arbitrage.
I have heard that because of how well they take care of their pieces over there, it is the place to go for the secondary to buy. So,
but part of me just wants to buy them. It's Steve.
Listen, I hear you. It becomes addicting. All right,
telling you not to end the stream. That's probably true.
They probably are. All right.
Trump is live.
Wait, what?
Trump is live. That's what they say to him. No, that's what they say to Amit, though. They're
like,
all right, guys. And they're like, Trump is live. Call Steve.
Trump is live. Love it. Love it. All right, everyone. Have a great night. Everybody that was at the meetup, thank you very much for coming. It was a blast meeting everybody and hanging out. Absolutely. Looking forward to the next one. For everybody that didn't get to come, hopefully you're at the next one. I was informed I will be going to the next one. So
let's bunk together, Steve.
See everyone later. Have a great night.
Later all.